Hey friends, welcome back to the channel. In today's video, I have a very special guest, Hans, from Hans German Realty. So Hans, welcome.
Thank you so much, Azan, for having me.
If you haven't seen, Hans channel is mostly or actually right now exclusively focused on real estate in Germany, where he talks about things to look into about real estate and the tools for real estate in Germany. He can share a lot of things about real estate. So I'm very happy to have him with me today. So Hans, maybe you can introduce yourself a little bit.
Yeah, sure. Yeah, thanks for having me on the channel. My name's Hans. I'm originally from Freiburg, also from the sort of Black Forest region. And I now live in Berlin. I'm actually a strategy consultant working full time for a big international firm, but I'm also running this YouTube channel, as you mentioned, Hans German Realty. And yeah, as you said, it's mostly about real estate here in Germany. And what I'm trying to bring across is how people, especially expats, can invest in the German real estate market. Me, myself, I own 14 properties at the moment, also in the south of Germany, which means I try, or I hope I have a little bit of experience regarding investing in real estate. And I, as I said, try to bring across how this whole process works, right? For expats, it's really intransparent how
Mhm.
one can actually buy a property, what steps need to be done in order to do what requirements people might have, such as what's the needed salary you need for
Mhm.
this, how much equity do you need to have available, and how do I even find a property? So those are some of the topics I cover on my channel as well.
Great. Before we go in deep in the real estate investing, maybe you can start by sharing how you really got into investing. Maybe was real estate investing your first idea, or were you investing in stocks, ETFs, or other like cryptocurrencies, gold investments, or whatever
Hmm.
before you really went deep into real estate investing?
Yeah, thanks for asking. No, I didn't start off investing in real estate. I actually, as I'd say most people do at a younger age, I was already or always interested in sort of the business aspects of things, right? Which means that I was also relatively swiftly interested in how stocks work and so on. And that's where, when I was like 17 years old, I really tried to learn a lot more about like ETF stocks and other asset classes. And I actually started investing when I was like 18 years old. I was like legally
Oh.
allowed to open a brokerage account and then to start
Mhm.
investing under my own, right? So whenever I had some money available, I tried to put in some money into individual stocks at first, right? Because when you start off, you think you're a great investor and you try to find the companies
Mhm.
which might provide you with high returns. But later on, as I did more research, read some more books, you always know that, or you get to know that actually statistics prove that you have a higher return if you just invest in basic ETFs. That's how I started off. I invested in 3 or 4 major ETFs, which are like the most common ones, such as the
Mhm.
MSCI World, emerging markets, and say the stocks Europe as well. And that's how I started it off, to be honest. Then over the years, I put more and more money into my brokerage account. I also bought other asset classes. I also invested a little bit of money into, let's say, gold, later on cryptocurrencies, as most people did, I think. But then once I went into my first job and had a stable salary, I then tried to invest in real estate and got stronger in that, educated myself, of course, looked at different markets, right? Where do I even want to invest? And that's how this all started off.
Interesting. You said that you started investing at a really young age of 18 years. I've talked to different people like expats and non-expats like native Germans. I've had mixed like conversations. One half says like Germans, native Germans are not really good in investing or saving. And the other half is saying, no, we started investing at a really young age. There was a lot of financial education in my family. I started at 18. Or someone says my father or my mother started an investment or a kinder or let's say kids depot conto for them. And they just when the child or they reached 18 years old, they transferred this portfolio to them. So how's your mental concept of like investing with Germans?
Yeah, I mean, it totally depends on how you grew up and what your environment is like. Of course, there are some people out there who try to get a brokerage account for their kid to start as early as possible, and that's something probably I would do now in case I would get kids at some point in the years. But it really depends on your environment, right? My parents specifically, they never really invested in stocks until I told them to do, and
Mhm.
for a couple of years now that they actually did that. But the mentality in Germany is that many people actually leave their money on the regular bank account where you only
Okay.
get a little bit of interest. I think, I don't
Mhm.
know the exact numbers, but I would guess that like 60, 70%, if not way higher, actually don't really invest into stocks, but rather just keep their money in their bank account where they receive little interest.
So generally the savings account or the fixed deposit accounts where
Yes,
they
correct. Yeah, yeah.
add money for 5 or 10 years and they get a very small percentage of interest.
Yes, totally. Yeah, yeah. And then what some people do is, of course, try to be or invest a little bit into real estate. I think that's a little bit more common even than compared to investing in stocks or ETFs or whatever.
So in addition to this savings or like fixed deposit accounts, I've talked to a lot of people in Germany who start this Bausparvertrag. They add some certain amount of money every month, and based on the contract, let's say in 10 years, 15 years, they would be either buying a property based on this account or building something. But I found that a lot of people who've invested in this, they find it not that great of an investment vehicle. So
Yeah.
what is your opinion on this?
Yes, totally. I think people did this basically like 20 or 30 years ago, maybe 10 years ago as well, right? They started, as you said, investing into this Bausparvertrag, and mostly there are several things attached to this product, right? You can get cheaper financing later on at a determined date afterwards, let's say 10, 20 years afterwards, right? But you still invest on a monthly basis into this product. And what most people have realized now is that this really isn't such a good product. You don't get a high return on, and it doesn't really make sense to use it anymore. I think there are way better products out there. I'd be careful about Bausparverträge. Similar Rentenversicherungen are also another topic I know, but these are all sort of these older products which aren't really up to date because they're just too high in terms of their costs and don't make sense for you financially.
Okay. So, as you said, like the German mentality is, or a lot of people in Germany, they have a mentality of saver, like being a saver. So, how can one shift this mentality from being a saver to actually an investor?
Yeah, I think that's a very interesting question. I think you just got to start off slow, right? It's similar to
Mm,
what I always try to describe on my channel. Start off with a small property, which you can invest in. I do the same with other asset classes, right? Which means that
mhm,
if you come from a background or if you have a background where you usually don't invest in, let's say, ETFs, stocks, or other investment products, try to
mhm,
do so just very small, right? I don't know, open a brokerage account, invest 25 or 50 euros per month into an ETF,
mhm.
and that's how you can start off. Continue doing that for, let's say, a couple of years, and then you build up your equity over time. And of course, if you do have more money available, which you want to invest and can invest, then of course you can increase the amount, invest in other asset classes. But in general, I would say start off small, see how it goes, get to know the whole process of how you can actually do that, consequences are, let's say also on taxes, right? And then evolve it over time. Make it bigger if you want to, but you don't need to.
Okay. So there's a very common like conception or misconception would, if we say, as an expat, let's say if you are on a blue card, is it possible for you to start investing or buy a real estate? Is it
Yes,
possible?
yes, it's actually possible. There are some restrictions to it and some disadvantages, I would say, compared to if you have a permanent residency.
Mhm,
Let's say, just to name a few, for example, there are only a few banks which are willing to finance blue card holders. Deutsche
mhm,
Bank is one of them. Some Sparkassen usually do that. Volksbanken, I've heard, don't always do that.
mhm.
So you are limited in terms of the banks which are willing to finance you.
So would it be a valid statement, not necessarily a fact? Would it be a valid statement if I say it is better that you first have a PR and then start, or not start thinking? You can always think about stuff all the time, but is it a valid thing to say that you should buy your first real estate, either property or investment, once you get a PR, or is it a bad statement to have?
I'd say it's a bad statement to have. If you have a good
Okay.
deal, it really, you just got to look at the financials. I was going to
Mhm.
say as well that if you have a blue card, your interest rate will be a bit higher compared to if you have a permanent residency. Mostly, I
Okay.
would say 0.5%, which means that instead of paying 4% as
Mm.
permanent residency, people would pay at the moment, you would pay 4 point, let's say 5% interest. Of course, take that into account once you evaluate your deal, do your financial analysis. But
Mhm.
if your deal still makes sense from a financial perspective, even with this increased interest, of course, take it. So I wouldn't wait
Mm.
until you have this permanent residency.
Okay. I've had like different conversations. A lot of people said that my bank or the banks that I talk to, they simply or outright reject it because, as you said, some banks do actually work with PR holders, not all of them.
Yep.
So I think it's an important point to distinguish which, or at least identify the banks that are working or allowing, let's say, are open to work with blue card holders before like you start looking for deals.
Yes, I would underline that. Yeah. Sometimes the banks, if before you or when you approach them, they want you to have a concrete property,
Offer.
yeah, or
Okay.
concrete offer, which you can then put on the table and say, this is the one I would like to evaluate together with you. If you approach them and don't have a concrete offer or property at hand, then they would
Mm.
say, okay, come back to us once you have one.
Then you have.
Yep.
Okay. Okay. So it's a double-edged sword, so to speak. Like you need to have an offer.
Yep.
And if you have an offer with a bank which does not accept blue card holder, so it's a mixture. But you can always go to different banks,
Yep.
talk to different people. It's not like your own bank. Let's say if you have a Deutsche Bank account and at that specific time Deutsche Bank doesn't want to work with you, it's not that you as a blue card holder are not able to get financing. It's just at this specific time, this specific bank is not
Totally.
willing to work.
Yeah, that's why I would always say just approach different banks. If the one
Okay.
bank doesn't do it with you, just choose another one. And one thing I would add as well, since you said it's a trade-off, right? Just take a regular expose from another property, which you're not going to invest in that, right? But just
Yeah.
take that one, go to your bank, act as you would like to invest into that one. So that's certainly something you can do as well. Just
No,
take a sort of a dummy expose or dummy property.
something that's already available in the market
Totally.
and you just want to look and get a feeling if this bank will work with you or not. That's a good and interesting point
Yep.
if someone is actually thinking about investing in real estate in Germany. Please hit the like button if you're getting value from this video and consider subscribing. So the next question is, in general, is it okay to, or is it must to have a really good or decent down payment to have when you are investing in real estate?
Yeah, I would say the standard is that you would have or to pay or bring in some equity, right? And you would finance in Germany 100% of the purchase price. Let's say you buy a
Yeah.
property for 100,000 euros, then you usually get a mortgage on these 100,000 euros from your, let's say, local bank. What you would then have to bring in terms of your own down payment or equity is like an additional 10 to 12% here in Germany, which means that
Mhm.
10 to 12,000 euros in this case, right? And for this, you would need to cover the closing costs. And these
Mm.
are specific costs such as the broker fee, which you will have to pay, the notary meeting fees, the transfer tax, and so on. There are a few more, but these are usually the costs which you have to cover with your own equity.
Interesting. So generally, a lot of people say, "Hi, you don't need any money. You can buy something for just 0%. You can get this two loans. One loan is covering your whole mortgage, and then another loan is covering your buying costs. You can get it. I've shared this in many of my videos, but I don't think it's an option available for everyone
Yeah,
out there."
totally. Yes, I agree with that. And to me personally, I wouldn't want to do it either, right? It shows that you're really trying to do something and don't over leverage yourself, meaning don't take up too much credit, right? Put in some equity, and it shows the bank as well that you then are investing your time and effort and, of course, also money, right, into this property. I
Mm.
wouldn't want to be over leveraged myself. That's why I always bring in these 10, 12% costs.
So let's say another important or interesting point is with real estate, you can actually depreciate a lot of things. So a lot of people have a, I won't say misconception, but a lot of people don't quite understand if you have a real estate property as an investment where someone else is living, you're renting it out, and if you are living in a place. So what kind of different tax benefits do both of these have?
Right.
Are both of these equal or is one having more theoretically more tax benefits?
Right. Yeah. No, these are not equal, right? If you live in a property yourself, which you have bought, there aren't really anything you can deduct from your taxes compared to if you buy an apartment and then rent it out. You can basically deduct all of the expenses which are associated to the property from your taxes. Just to give you, or the transfer tax will depreciate it over a span of 50 years, let's say. Of course, every renovation you do can be deducted from your taxes as well, which means that overall you can deduct all expenses which are associated to the property and thereby reduce your taxable income, let's say from your main job, by significant amounts. Just to make an example here, I said this at the beginning, I have 14 properties at the moment, and I create a taxable loss with this, right? And that's the goal. You want to
Mhm.
create a taxable loss to then reduce your taxable income significantly. And with these 14 properties, also since I did some renovations, I created a taxable loss of around 30,000 euros last year, and that
Okay.
significantly then reduces my taxable income.
On the point of renovation, a lot of people like they hire certain professionals for something. You actually need a professional because you can't do electrical like deep electrical work on your own. You'll
Right.
have to hire a professional. But let's say if something that's not requiring a professional, or at least legally a professional to do that renovation, is doing a renovation on your own, let's say, beneficial? Or what's your opinion on this?
Yes, yes. Me personally, I think it can be beneficial, of course. Yeah, since as you said, for some things or for some maintenance work or renovations, for several or specific types of work, you will have to get a Meister, right, in Germany,
Mhm.
like a Meisterbetrieb, a business which has a certification in their respective field. As you said, an
Mhm.
electrician, but also a plumber and others. For this, I would always recommend to really choose one of these certified companies, right? For other work, such as plastering the walls, painting the walls, adding new flooring, that's certainly something you can do yourself. And I know it's sometimes difficult if you don't have any experience in this, right? But really, I did that myself as well. When I bought my first apartment, I renovated quite a lot actually myself, and I learned it all through YouTube. It's amazing what you
Mhm.
can find on YouTube and how you can educate yourself also in this regard. And that's certainly something you can do. And by that, of course, you save up on a lot of costs.
But there's a conundrum, right? Let's say if you are painting your walls, so you bought the paint, you can deduct this paint from your taxes.
Yeah.
But the hours that you spend on your like doing yourself, you cannot cover those in your taxes. And if you hire a company, you can deduct. Can you deduct like the labor cost and the material cost, or is it just the material cost?
No, it's both. You both, because you will get one invoice, right, from the company you hired,
Mm.
and you can deduct the full amount of that invoice, let's say. And that includes, of course, labor and material, right? If you
Mm.
renovate yourself, as you said, you just have these material costs, such as the paint. There are some costs you can also add to that. There's 30 euros per every 8 hours spent on the apartment or
Mhm.
wherever your apartment is, right? So that's something you can also include. But yeah, generally, you don't get paid, of course, for the own work you did, which means you cannot
Mm.
depreciate that. So really make it dependent on your taxable income, I would say. If you have a really high taxable income, that's also what I do at the moment. I don't want to do every renovation myself now. That's why I'm
Mhm.
also letting or hiring firms to do this for me, which I can then deduct from my taxes. A few years back, as I said, I did that myself. My
Mhm.
salary wasn't that high, and then it also made sense to not create these big expenses, which wouldn't make sense from a tax perspective to deduct them.
So it's always a balance depending on how much you're earning, how much your taxable income is,
Yes.
and if it makes sense for you to renovate yourself and just add these equipment or material costs in your taxes, or if you're having a high enough taxable income, maybe hiring someone directly
Yep.
and reducing your taxable income. So it's a balance that you need to figure out based on
Yes.
your specific situation.
Totally. Maybe if I could just add one more thing. I think I actually made a video about this a couple of weeks back. If you earn more than 67,000 euros, that's where your tax bracket, the highest tax bracket in Germany, kicks in.
Mhm.
Pay 42% in taxes on every euro earned above the 67,000 euro threshold. Then it, in my perspective, really makes sense to invest in real estate because then you can really reduce your taxable income in a way that it makes sense for you. So if you're earning more than 67,000, I think it really makes sense to invest in real estate as well.
So, what, in your opinion, are, let's say, three or four of the most important questions or things that you should check when you are buying a real estate investment property?
So when you buy real estate, it really depends on your personal situation, right? Which means that you would need to make it dependent on how much equity you actually have, how willing or risk averse you actually are as well, and then find a suitable property which sort of fits your needs and what you actually want to accomplish, right? What I always look for is for properties which are cash flow positive, maybe not immediately, but after a possible renovation, right? That's always the end goal, to be cash flow positive, because
Mm.
basically you can buy as many properties as you want as long as you're really cash flow positive in throughout your
Mm.
portfolio, let's say. So that is an important requirement. I said that on purpose, that it doesn't need to be cash flow positive at the beginning, because maybe you will find a property which is also not in a really good condition, which you can then renovate and then rent out at a higher rent to then be cash flow positive, let's say a couple of
Mm.
months afterwards. Overall, I think it would make sense, and that's something especially for people who just want to start off investing in real estate, then precise look at the condition of the property. And then again, how risk averse are you really? Would you like to do renovations yourself, or would you rather invest in a property which is turnkey ready for you, your renter, to move in? So not only looking at the financials, but of course also the condition of the property itself, let's say a Wohnung unit, but also at the
Mhm.
condition of the overall building. That's really important, I think. And then it should just basically fit to your needs, right?
Okay, interesting. Let's say if let's do a concrete example. Let's say if there is someone who is a single earner and they have, let's say, a wife and a couple of kids, and this person is earning, let's say, 70,000 euros, and after taxes, let's say they have around about 4,000 euros coming in every month, and they have 1,000 euros like pure savings. Is it, let's say, a reasonable thing for them to buy a property, a Wohnung, let's say, their let's say the mortgage cost is round about 800, 900 euros. So I'm talking about 1,000 euros in pure savings.
Yeah, that's a very interesting question, but I would say you would need to have a little bit of a bigger financial cushion, right? If you invest in real estate. Of course, something can
Mhm,
go wrong at any time. Let's say a pipe
mhm,
breaks, right? And you have water damage within the apartment. But this, you would then have to find a contractor really fast, which would be a bit expensive, most likely. Let's say again, another example would be, what if the heating breaks down? The heating system is old and I don't know, it shuts down at some point. Then you would have to find somebody who fixes your heating system. So I think for
mhm,
this, for possible things which you cannot always plan ahead of or
mhm.
with, you need a higher financial cushion. And that's why I would say just for this family specific, they should have a couple of thousand so in their bank account, just ready in case something happens. That's what I would save up for before you invest in real estate.
So let's add to this example.
Mhm.
Let's say this family, again, 4,000 euros
Yeah.
is the net income, and 3,000 is their pure expenses. They have a 3 months emergency fund of, let's say, 10,000 euros. And on top of that, they have spent the 10%
Mhm.
from their own pocket,
Okay.
the buying costs, and then they have put in 20% of the down payment as well.
Okay.
And on top of that, let's say they have 10,000 euros saved just for this costing or whatever the
Yep.
running costs are. So let's say even in that condition,
Yeah.
they have 1,000 euros. Approximately how much should this go in on the mortgage? Just for the sake of an example.
Yeah, I would start off small, right? And then recommend that they buy a smaller apartment, which is only
Mhm.
going to cost them 500 euros per month in terms of its
Okay.
mortgage. That's
Mhm.
what I would recommend, again, to start off small and to get to know this whole process of how it actually works. I don't know if they're
Mhm.
renting out the apartment. I hope so. In that
Mhm.
case, you would also get rent, right? But
Mhm.
which hopefully also covers all of the mortgage costs. But that's what I would do at the beginning.
So I gave you this example based on a lot of inquiries or questions that people or expats in Germany send to me. This is a salary bracket which I think it's not for people on the start of their career. I would say someone who's in 5 to 6 years of their career, they're earning around about 4,000 euros net
Yep.
that is coming to the bank account. And
Yep.
let's say they are having like a spouse and two children, and the spouse is not working. So at the end of the day, they are like spending everything. This 1,000 euros that they have, it's excluding the holiday, the costs, or whatever costs that they are planning for. So I think I've gotten like 15 to 20 questions
Okay.
very similar to this kind of range. That's why I gave you this specific amount. Maybe like a lot of expats start thinking about like real estate investment,
Right.
let's say 5 to 6 years into their career.
Yep.
So at that time, a lot of averages are pointing towards this direction. Hence my question.
Okay.
So
Got it.
based on your experience, you're saying, let's say 5 to 600. And once the salary or once they know a lot more about real estate, then they can look into more like a higher property in terms of
Totally.
investment.
Yeah, especially
Oh,
if it's cash flow positive, then as I said, you can basically buy one property after the other.
okay. That's interesting. Okay. Thank you, Hans. It was a very interesting and knowledgeable conversation that I had. So, everyone, please go on and check out Hans' channel, Hans German Realty, and have a look. He has really good quality content on real estate investing in Germany.
Thank you so much, Ezan. Thanks for taking the time, and my pleasure, and hope to see you soon.
Definitely.